Tesla's gearing up for its expansion plans in China. The electric car maker secured a $1.4 billion 5-year loan from Chinese banks. Part of this new loan will be used to roll over previous debt, which was coming to maturity soon in 2020. This is, of course, according to a Reuters exclusive report. To break it down for us and help us understand what it means for Tesla, Yahoo Finance's Pras Subramanian, and we should point out Tesla stock right now. Can we pull up the Tesla chart real quick?
Back above.
What was the quote? Can you quote Elon Musk for us?
Funding secured. Oh, what he said today.
What he said, yeah, just the tweet earlier.
The stock is high.
So
LOL.
high.
So
Yes.
high.
Okay, so Pras, I mean, this is what companies do all the time. They try to refinance at more favorable rates and roll over previous debt.
Yeah, it's a little bit of extension too to sort of fund that Shanghai factory. I gotta love the tweet, by the way. It's just so, he couldn't help himself.
Yeah.
SEC,
Blame him.
Who cares, have fun. But yeah, it's a rollover the debt. It's a way to grow the business there in China. Look, he's done things there that most businesses haven't. I mean, this is not a joint venture. It's their own, wholly owned foreign factory in China. And they're getting a really good benchmark rate for that loan too.
It's so different. That product is so different. I mean, I think it'd be tough to knock off. I mean, they have electric cars in China, but specifically that, I just wonder if you'll be able to build that whole ecosystem over there.
Oh, you mean with regards to the chargers, the
software updates and all that.
Auto driving, all that stuff.
Yeah.
Yeah, I would imagine, but you say that, but then I wonder what he's done so much in China. It's amazing to me that he's able to convince them. Yeah, go ahead.
All credit to Elon Musk. He has survived what had started to look like a really bad year. He won that court case, the guy he called a pedo guy, all of that. But in China, he doesn't really get the credit for what he's done with Shanghai. I mean, going there is one thing, but the Chinese changed their requirement that you have a Chinese partner. What was it, 2 years ago? So Ford, General Motors, they didn't have that option 10, 20 years ago. They had to have the Chinese partner.
So he's capitalizing in the changing landscape there in China. But I'm still impressed by the fact that they want to make 1,000 cars there a year. They might even be able to make more. Demand, I think Morgan Stanley thinks will be about 200,000 cars a year just in China alone. So, I mean, there's a lot of room for growth there, and I think that's a great pillar for their company.
Well, it's not like the challenges are gone, though. I mean, you still have a cash burn problem at Tesla, right? And you still have the reports that even before they're selling the cars in China, that they're going to be cutting the price. So it's not like, there's no headwinds whatsoever.
I will say this. I will say that the margins are better in China for how much it costs to make the cars there. And then on top of that, they're getting actual money from the Chinese banks.
On a personal note, I just know people in China who have these cars, and it has brand equity there. I mean, it's got panache, it's got cachet. People like them and would like to own them. And so that brand equity is pretty important.
Sure, eventually you have to consistently make money making the things, though.
Oh yeah, no, 100%. It's a great product, and we'll see if they're able to make it, sustainable.
And it's a scale story. The more they make, potentially, the more money they can make.
Ross, thank you.
Yep.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.